Question number 1. Following is the trial balance as on 31st March 2014. Trial balance as on 31st March 2014. Land and building goes to assets side. Next item is machinery goes to assets side. Next is salary and wages goes to profit and loss account. Cash at bank assets. Cash in hand assets. Office expenses profit and loss account. Motor vans assets. Capital account. Liabilities side of balance sheet. Carriage trading account. Purchases and sales trading account. Returns trading account. Bad debts goes to profit and loss account. Debtors goes to assets side and creditors goes to liabilities side. Next is rent goes to profit and loss account. Bills payable liabilities. Printing and stationery profit and loss account. Traveling expenses profit and loss account. Stock on 1st April 2013 goes to trading account. Insurance profit and loss account. Discount profit and loss account. Advertisement profit and loss account. Furniture goes to assets side. Now let's see the adjustments. Adjustment number 1. Closing stock was valued at cost price of Rs 41,000, market price Rs 42,000. It has two effects. First is trading account credit side and second effect in balance sheet assets side. Next is adjustment number 2. Goods worth Rs 5,000 taken over by proprietor for personal use were not entered in the books. It has two effects. First is shown in trading account credit side and second is shown in drawings, less from capital. Adjustment number 3. Goods worth Rs 5,000 were destroyed by fire, and insurance company admitted a claim of Rs 4,000. Hence it has three effects. First effect is trading account, credit side, Rs 5,000 and second effect is balance sheet assets side, Rs 4,000, and third effect, profit and loss account, debit side, as less from loss by fire, 5,000 minus 4,000 is equal to 1,000. Adjustment number 4. Outstanding expenses rent Rs 100, salary Rs 500. It has two effect. First effect is shown in profit and loss account debit side, add to rent and salary, and second effect is shown in balance sheet, liability side. We will mark down on as adjustment number 4 on salaries and wages, and adjustment number 4 on rent. Next is adjustment number 5. Provide depreciation at 10% on machinery, and 5% on furniture. Depreciation will decrease the amount of fixed assets, hence, its first effect will shown in balance sheet, less from concern assets. Depreciation is a loss of the business, hence, its second effect is shown in profit and loss account debit side, so we will mark down on as adjustment number 5, on machinery and mark down adjustment number 5, on furniture. Adjustment number 6. Provide Rs 800 for reserve for doubtful debts on debtors. RDD is doubtful loss, which will occur in future, hence its first effect is shown on balance sheet, less from sundry debtor, and second effect will recorded on profit and loss account, add to bad debts, so we will mark down on as adjustment number 6, on bad debts, and on debtors. You are required to prepare trading and profit and loss account for the year ending 31st March 2007, and the balance sheet as on that date, after considering the above adjustments. Solution 1. First we will draw the format of trading account in the books of trading account for the year ended 31st March 2014. Debit side, credit side, particulars rupees, particulars rupees. Then profit and loss account for the year ended 31st March 2014. Debit side, credit side, particulars rupees, particulars rupees. At last we'll draw the format of balance sheet, Messrs. Balance sheet as on 31st March 2014. Liabilities rupees, assets rupees. Now let's start the solution of question number 1. In the trial balance, land and building is rupees 55,000 shown in balance sheet, assets side, land and building rupees 55,000. Next is machinery of rupees 40,000 shown in balance sheet, assets side, machinery rupees 40,000 in a column because there is an adjustment. Number 5. Provide depreciation at 10% on machinery. It has two effects. Its first effect is shown in balance sheet, less from concern assets, and its second effect is shown in profit and loss account debit side, and calculation of depreciation is done as follows. Amount of depreciation on machinery of rupees 40,000 into rate of depreciation 10%, that is 10 upon 100 for 12 months into 12 upon 12, 0 cancel, 12 cancel, so 400 into 10 is equal to 4,000. Its first effect less from machinery as depreciation of rupees 4,000, so 40,000 less 4,000 is equal to 36,000, because depreciation is reduction in the value of fixed assets, hence it is reduced from fixed assets, and its second effect is shown in profit and loss account, debit side under the heading of to depreciation on machinery, rupees 4,000, because depreciation is a loss of business, hence it is shown on debit side of profit and loss account. As per accounting rules, debit the expenses and losses, and credit the income and gains. Next entry, salary and wages rupees 21,000, it is shown in profit and loss account, on debit side, to salaries and wages, rupees 21,000, in a column because there is an adjustment. Number 4, outstanding expenses, salary rupees 500, it has two effects. First effect is shown in profit and loss account, debit side, and the second effect is shown in balance sheet, liability side. Let's see its first effect. It is shown in profit and loss account, debit side, add to salary, as outstanding of rupees 500, so 21,000 plus 500, is equal to 21,500, because such outstanding salary is an expense of current year, hence it is added to salary and wages, and its second effect shown in balance sheet, liabilities side, outstanding salary rupees 500, because such outstanding salary are still to be paid, hence it is shown in the liability side. Next entry, cash at bank rupees 45,000, it is shown in balance sheet, assets side, cash at bank rupees 45,000. Next entry, cash in hand rupees 1,100, it is shown in balance sheet, assets side, cash in hand rupees 1,100. Next entry, office expenses, rupees 1,000, it is shown in profit and loss account, debit side, to office expenses rupees 1,000. Next entry, motor van, rupees 18,000, it is shown in balance sheet, assets side, motor van rupees 18,000. Next is capital account of rupees 1,78,000, it is shown in balance sheet, liabilities side, capital account rupees 1,78,000. Next entry, carriage rupees 5,000, it is shown in trading account, debit side, to carriage rupees 5,000. Next is purchases of rupees 2,20,000, it is shown in trading account, debit side, to purchases rupees 2,20,000, in a column because there is return on purchases. Next is sales rupees 2,80,000, it is shown in trading account on credit side, by sales rupees 2,80,000, in a column because there is return on sales. Next, return on credit side of rupees 5,500, this is purchase return, it is shown in trading account, debit side, less from purchases, as purchase returns rupees 5,500, so 2,20,000 minus 5,500 is equal to 2,14,500. Next is return on debit side of rupees 2,000, this is sales return, it is shown in trading account, credit side, less from sales, as sales returns rupees 2,000, so 2,80,000 minus 2,000 is equal to 2,78,000. Next entry, bad debts of rupees 1,000, it is shown in profit and loss account, debit side, to bad debts rupees 1,000, in a column because there is adjustment on bad debts. Next is debtors of rupees 32,800, it is shown in balance sheet, assets side, debtors rupees 32,800, in a column because there is an adjustment on debtors. Adjustment number 6, provide rupees 800 for, reserve for doubtful debts on debtors. It has two effects. First effect is shown in balance sheet, less from debtors, and the second effect is shown in profit and loss account, add to bad debts. Let's see its first effect. It is shown in balance sheet, assets side, less from debtors as RDD rupees 800, so 32,800 minus 800 is equal to 32,000. RDD means reserve for doubtful debt. It means some debtors may be unable to pay his dues in near future, hence it is reduced from debtors. And second effect, record in profit and loss account, debit side, added to bad debts as RDD rupees 800, so 1,000 plus 800 is equal to 1,800, because it is a doubtful loss due to debtors, hence it is shown in debit side of profit and loss account. As per accounting rule, debit the expenses and losses, credit the income and gain. Next entry, creditors of rupees 35,000, it is shown in balance sheet, liabilities side, creditors rupees 35,000. Next is rent of rupees 1,100, it is shown in profit and loss account, debit side, to rent rupees 1,100, in a column because there is adjustment on rent. Adjustment number 4, outstanding expenses, rent rupees 100, it has two effects. First effect is shown in profit and loss account, debit side, and the second effect is shown in balance sheet, liability side. Let's see its first effect. It is shown in profit and loss account, debit side, add to rent, as outstanding rent rupees 100, so 1,100 plus 100 is equal to 1,200, because such outstanding rent is an expense of current year, hence it is added to rent, and its second effect shown in balance sheet, liabilities side, outstanding rent rupees 100, because such outstanding rent are still to be paid, hence it is shown in the liability side. Next entry, bills payable of rupees 33,000, it is shown in balance sheet, liabilities side, bills payable rupees 33,000. Next is printing and stationery of rupees 1,500, it is shown in profit and loss account, debit side, to printing and stationery rupees 1,500. Next entry, traveling expenses of rupees 5,500, it is shown in profit and loss account, debit side, to traveling expenses rupees 5,500. Next, stock on 1st April 2006, opening stock of rupees 30,000, it is shown in trading account, debit side, to opening stock rupees 30,000. Next, insurance rupees 1,500, it is shown in profit and loss account, debit side, to insurance rupees 1,500. Next entry, discount of rupees 8,000, it is shown in profit and loss account, debit side, to discount rupees 8,000. Next entry, advertisement rupees 12,000, it is shown in profit and loss account, debit side, to advertisement rupees 12,000. Next, furniture rupees 30,000, it is shown in balance sheet, assets side, furniture rupees 30,000 in a column, because there is adjustment. Number 5. Provide depreciation at 5% on furniture. It has two effects. First effect is shown in balance sheet, less from concern assets, and the second effect is shown in profit and loss account, debit side. Let's see its first effect. It is shown in amount of depreciation on furniture of rupees 30,000 into rate of depreciation 5%, that is 5 upon 100 for 12 months into 12 upon 12, 0 cancel, 12 cancel, so 300 into 5 is equal to 1,500. Its first effect less from furniture as depreciation of rupees 1,500, so 30,000 less 1,500 is equal to 28,500, because depreciation is reduction in the value of fixed assets, hence it is reduced from fixed assets. And its second effect, profit and loss account, debit side, under the heading of depreciation account, furniture rupees 1,500, so 4,000 plus 1,500 is equal to 5,500, because depreciation is a loss of business, hence it is shown on debit side of profit and loss account, as per accounting rules. Let's check all the remaining adjustments. Number 1. Closing stock was valued at cost price rupees 41,000 and market price rupees 42,000. This adjustment has two effects. First effect is shown in trading account, credit side, and the second effect is shown in balance sheet, assets side. Let's see its first effect. It is shown in trading account, credit side, by closing stock rupees 41,000. Its second effect shown in balance sheet, assets side, closing stock rupees 41,000. Adjustment number 2, goods worth rupees 5,000, taken over by proprietor for personal use, and it was not recorded in the books. This adjustment has two effects. First effect is shown in trading account, credit side, and the second effect is shown in balance sheet, liabilities side. less from capital. Lieutenants see its first effect, it is shown in trading account, credit side, by goods withdrawn by proprietor ₹5,000, as goods goes out, and second effect is record in balance sheet, liabilities side, less from capital, as less drawings, goods, ₹5,000, so 1,78,000 minus 5,000 is equals to 1,73,000, as such goods are withdrawn by proprietor for personal use, hence it is shown in balance sheet, liability side. Next, adjustment number 3. Goods worth ₹5,000 were destroyed by fire, which is shown in trading account, credit side, so its effect shown in trading account, credit side, by goods destroyed by fire, ₹5,000, because goods goes out from business, and insurance company admitted a claim of ₹4,000, it is shown in balance sheet, assets side, hence its effect shown in balance sheet, assets side, insurance claim receivable, ₹4,000, because it is receivable cash from insurance company, as insurance claim, hence it is a assets of the company, and its last effect shown in. Next, adjustment number 3. Goods worth ₹5,000 were destroyed by fire, and insurance company admitted a claim of ₹4,000, so 5,000 minus 4,000 is equal to 1,000, it is the loss of the business, hence it is shown in profit and loss account, as loss by fire. Profit and loss account, debit side, to loss by fire 5,000 minus 4,000 is equal to 1,000, in outer column. Adjustments number 4, 5, 6 are already done, now all the adjustments are completed, so close down all the accounts. First close the trading account, we will compare the both side of trading account, and find out either gross profit or gross loss. Total amount of credit side in the trading account, is more than debit side, ₹3,29,000. Write down on both side. Then total of debit side, that is ₹2,49,500 less from credit side of ₹3,29,000, so 3,29,500 minus 2,49,500 is equal to 79,500, so to gross profit carried down of ₹79,500. Now transfer this amount of gross profit to profit and loss account, credit side, by gross profit brought down ₹79,500. Now close down the profit and loss account. Total amount of credit side is more than debit side of the profit and loss account is ₹79,500. Write down on the both side. Total of the debit side of ₹60,500 less from total of credit side ₹79,500, so 79,500 minus 60,500 is equal to ₹19,000 as net profit, so to net profit carried down of ₹19,000. Such net profit is transferred to balance sheet, liabilities side as add net profit of ₹19,000, so 1,73,000 plus 19,000 is equal to 1,92,000. Now close down the balance sheet. Total of liability side is ₹2,60,600. Now total the assets side. Total of assets side is ₹2,60,600, so both the sides are tallied.